So have BP shares been beaten down too much? They rose today for the first time in 15 consecutive trading days. Carl Larry joins us now from Houston. He's the president of Oil Outlooks and Opinions and also the former VP at Credit Suisse Energy. Carl, when you were last on the show about 2 weeks ago, you were pretty outraged that the spill hadn't been contained since it started. That was April the 24th. And now, what are we talking about? Day 32? Can BP really fix this?
You know what? I think you and I probably know about as much as this as they do right now. There's not a lot they know how to do or can do. They just really weren't prepared. So whether they can do something about it, it really doesn't look very good right now. I think their best bet is to go down and drill relief wells as they planned, because that's kind of what they do. Trying to stop a leak is not their forte. Making holes and drilling for oil is what they do. Well,
indeed, you talk about not a pretty picture, Carl Larry. We're looking at live pictures of that gusher on the seabed floor in the Gulf of Mexico. What about the actual shares of BP and indeed some of the refining stocks? I mean, are they going to get a lift just because of seasonal driving patterns?
Well, I'm not sure about BP. BP is going to have its issues going forward. Maybe not so much on the money side, as we just heard your prior guest talk about how much cash they have in reserve. But if they have to halt drilling, or we see kind of restrictions in drilling, they could take a hit later on. As far as refining stocks goes, they could be seeing some kind of lift coming down the road. Again, as your prior guest mentioned, that we might see more action from the trucking side, definitely from the rail side, if we see any kind of delays or halts into the Gulf for shipping.
Carl Larry, what effect on the price of oil is the turmoil in Europe having?
Well, we're definitely seeing a lack of demand there, and we're seeing prices kind of being reflected that. The strength of the dollar, the weakness of the euro, and the overall just outlook of the demand future for oil out in Europe is causing a little bit of a dip here. Although we are getting to a very touchy stage here. When oil gets too low, obviously it doesn't make sense to increase production or increase development, and it's right around that level, right around the $65, $70 level. We have to start watching that and being careful.
Carl Larry, how can oil prices be too low? I mean, isn't a lower oil price, isn't that going to be good, let's say, for the U.S. economy at $69 a barrel? That's better than $150.
Oh, sure, it is. It is. The problem is now that we have to worry about is how do we keep it coming? Obviously, if we have trouble in the Gulf and we see drilling halted or delayed, if we see oil shipments coming in that are delayed or halted because the ships have to be scrubbed, if the only oil we're going to be seeing is coming from Canada, Canada needs oil around $70, $65 to keep production going at a profit. Same thing with the OPEC countries. Their break-even is probably around $65. So, again, we're in a very touchy area here, and keeping it here is one thing, but it's hard to say it'll stay here. More than likely, we'll see it go right back up.
You think it'll go up? What kind of price estimate do you have for a barrel of crude, Larry?
Well, I think we'll probably see it back in the mid-80s. I think $85 is definitely attainable within the next month or two, depending, again, on what we see with the hurricane activity, what we see with the Gulf activity and drilling. 85 is going to be my low number. 95 could be my high number.
All right. I want to thank you very much, Carl Larry, coming to us from Oil Outlook and Opinions.